the auto trader for the range breakout on copper. HG has took a big trade at the moment. It's still risk-free. So we had the European Open. We did have an initial loser from the opening range trade, and then what we have is what's called a continuation trade. So we have this European, I'll just move the chart slightly, this European Open range just here, and then if it comes out and it comes back in again, and we get a candle close in the range, and also the range bias is green, we look for a breakout, and that's what we're in right now. It's around $600-ish in profit at this moment in time. But what's going to happen to this? So what I'm going to do is just going to pull up a normal chart. That's the auto trader on NinjaTrader. So we have some preset information in the auto trader. So the first thing is we're risk free. Okay, so when it goes through 25 ticks, we have 34270. So we have a couple of ticks there just to cover any costs. That's where the trailing stop is right now. The next sort of milestone, if you like, is if it breaks 60 ticks, we adjust the stop to 30 ticks. Okay, so if we measure where that 30 ticks is right now from the entry, it's just here. So I'm going to put that in there. This, in theory, if we breach 60 ticks, is where the trailing stop will be. So let's put that in yellow. So the idea is then, if it breaks there, we have got some resistance up above from these big pivots to come down. So we've locked in 30 ticks if we can get through there. And then we've got some room up above. The next target, if you like, for the trailing stop adjust is 120 ticks. If it gets through there, we adjust it to 60 ticks, and then so on and so forth until such time as we either take out that trailing stop or we actually get to the max profit for the day, which we did last week. Some of the things also to note is right now we're forming this bullish pennant. So if I just go to the 5-minute time frame, this is just one of those chart patterns that you should look for. Obviously I'm not managing this trade, the auto trader's managing it, but I just thought I'd bring this in here where we've got this really strong move up, and that's what took us in. Okay, and then the market seems to not exactly relax, but there's a lot less volume and we're clustering. But what we're doing is we're forming this bullish pennant, if you like. It's like a flag on a golf course. And what we're doing is we're getting these higher lows, but we just can't push through that level at the top. In a lot of cases, when that happens and it does push through, it pushes through with a lot of volume, because at this moment in time we're getting buyers and sellers, we're getting buyers and sellers. Nobody really wants to push it, but as soon as somebody wants to push it, other traders see value, start a buy, and we probably have the next run up to indeed that next sort of resistance zone. The likelihood of it coming back down, it's there, but at this moment in time you can see the behavior is it wants to push up. We just need some orders up above this sort of zone in plenty of quantity, and once they start getting taken in, that will move, and that will take us through that threshold of 60 ticks to adjust the trailing stop on the auto trader. Now I could watch this video for the next half an hour and it may not do it. It may just go sideways because we've got no real data coming in. So we're testing those highs again there, look, and it just doesn't want to push through. So we've got a 3.4535 are these highs that just keep getting tested and we just can't push through. We're just not getting enough volume. When that happens though, it should push through, and then we would see probably some a momentum move. So one of these sort of green candles that we see here with the manager, or the free volume behavior indicator, and I'll put the link down below for that. When we get a green candle, it has more volume than the previous candle. When we get a green candle with a dot up above, that is higher than average volume as well, as you can see there. So we did get higher than average volume on those candles afterwards, but it just, you know, we got a grey is an up candle, but it has less volume than the previous candle, but higher than average. So now we've settled down, we've got lower than average candle volume, you know, the volume lower than average, and we're just trying to push through that ceiling. Imagine this as a short-term resistance. Okay, once we can push through there, in fact, you know, the price action should in theory go and test here and then come back to test this as support at some stage. So what I'm going to do is I'm going to pause the video there. I'm going to wait forever, and then I'll come back when something happens. Okay, sod's law is, as soon as I pause the video, it happens. Okay, there you can see we have the move out, increased volume, it's green. If I bring now the auto trader on, you will see that it has in fact, we're at $825 profit now. It has moved that trailing stop to lock in 30 ticks profit there, so it's looking good. And the main thing is we are below all of this sort of clustering that formed that bullish pennant, which is important because you know, if we come back to test in this clustering zone, we shouldn't in theory get taken out. We're looking for this momentum to continue. We've got an $1,800 max profit for the day, so it's just a matter of letting this run now. We have got some profit locked in, which is fantastic. We're pushing up again. When we push up through here, we can see you know, this pennant has been broken. It's a green candle, not a grey candle, so it's an up candle with more volume than the previous candle, and it's got higher than average volume. And that's what we would say is a classical move out of that bullish pennant. For those that are never going to get the you know, the auto trader and trade that sort of thing, and you're just new to trading, this bullish pennant is a very, very powerful chart pattern. To consider the breakout of those chart patterns is very, very important. But a multiple time frame approach is important, but also framing your chart. Right now, for example, on this 1 minute time frame, I've got the Elliott wave running. You know, one behavior trait I would expect to see is this wave 3 come through here. If it finds resistance and pulls back, to come back down and test this sort of level here, 4-3, you know, into this green zone, maybe 4-3-6-5. So, you know, it's very close to where our trailing stop is. So, you know, we haven't got a crystal ball. We don't know what's going to happen. I had a fantastic idea on this 5 minute time frame what was happening because of this bullish pennant forming, and the auto trader's done what it's supposed to do. When it's pushed through that 60 ticks, we've now locked in 30 ticks profit. We've just got to let this run now and see what happens. You know, we've had that initial move up through and break that ceiling, if you like. Now we need that volume to continue. It may not, it may be steady, it may pull back slightly and test the top of this, and then it will hopefully go back down again. But in any case, with the auto trader, we've locked in 30 ticks profit at $12.50 per tick. Not a bad little trade. Okay, so hopefully that helps. It's one of those things where I just saw it and I thought I'd make that video. But again, we are with the auto trader. I'm going to put for sophisticated traders to check out more information on the description in below. Also, the free volume behavior indicator for your charts. This is the trading view that you're looking at right now, but we've got it for others. I'm going to put that link in the description as well.